Hey there, economics enthusiasts. Today, let's dive into the latest economic trends in Hungary and uncover some fascinating insights. You might have heard that the Hungarian economy is taking a breather this summer, but what does that really mean? So, the Hungarian Central Statistical Office dropped some data on us about retail sales and industrial production in June. Now, this comes after the second quarter GDP data, which wasn't exactly a blockbuster. But here's the thing, the economy is showing some resilience. In June, industrial production took a dip, but it's not all doom and gloom. The year-on-year growth rate is still holding strong at 4.1%, and this follows a pattern of monthly volatility. It's like the Hungarian industry is playing a game of good month, bad month, and we're waiting for the next move. What's interesting here is that despite the ups and downs, the sector's production volume is almost back to its 2021 levels. This suggests that things might be looking up, and there's a glimmer of optimism on the horizon. The HCSO's preliminary data hints at growth in key manufacturing sectors, especially in electronics and transport equipment. And guess what? It's all tied to the AI boom and the buzz around vehicle manufacturing. Now, let's talk about the soft indicators. Manufacturing companies are feeling confident, with plans to hire more staff and expectations of busier order books. The Industrial Confidence Index is soaring, reaching heights not seen since the summer of 2022. This is a big deal because it shows that businesses are feeling positive despite the recent setbacks. But wait, there's a twist. The energy crisis caused by low Danube water levels is about to shake things up. It's like a plot twist in an economic thriller. We're expecting production cuts and negative figures in the coming months, especially with the PAC's nuclear power plants' reduced electricity generation capacity. However, if we can avoid a total shutdown at PAC's, there's hope for a swift recovery in the autumn. Here's my take on it: despite the current challenges, the Hungarian industry might just surprise us. With manufacturers having room to increase capacity, they could make up for lost production once the energy crisis is over. So, by the end of 2026, we might see the fixed base index surpassing the 2021 monthly average. This resilience could lead to a 3 to 4% growth in the manufacturing sector, which is a big deal after 3 years of recession. Now, let's shift gears to retail sales. June saw a slight dip, but the long-term trend is intriguing. Retail sales volume has been consistently higher than the 2021 monthly average, but it seems to be plateauing. What's happening here? Well, consumers might be changing their spending habits. Instead of buying more, they're buying better. It's a shift towards quality over quantity, and experiences over goods. This is where it gets really interesting. We're seeing a potential shift in consumer behavior. The service sector might be the new star, outshining retail sales in terms of growth. It's like consumers are saying, hey, we want experiences, not just stuff. This could be a game changer for the Hungarian economy, with consumption remaining the main driver in 2026. In my opinion, the Hungarian economy is like a roller coaster ride this summer. It's got its ups and downs, but there's a sense of resilience and potential for a comeback. The energy crisis is a wild card, but if managed well, it might not derail the economy's progress. So, stay tuned, because the story of Hungary's economic journey is far from over.